We start off with a deep red sea on Wall Street. The Nasdaq dropping another 3+% today, falling into the red for the week as markets digest the impact of yesterday's Fed decision. The S&P shedding nearly 2.5%. The Dow down as much as 950 points at its lows, clocking its biggest decline in more than 3 months. All three indices on pace for their worst December since 2018. And take a look at the move in yields. The 10-year dropping back into the 3.4% range. It is down nearly 90 basis points from its October high. So does today's action suggest the Fed could tip the economy into recession? Just yesterday, I think we were pretty much across the board saying the markets should have had a much stronger reaction to the much, hawkier Fed speak coming out of the Fed, Dan.
Yeah, no, I mean, listen, those compressed time frames when that announcement comes out and then the presser and then people taking their time to kind of process it. We usually see this sort of overnight kind of reversal of maybe that first move that's been going on for a very long time. But, your question is, Mel, does the Fed's hawkishness push the U.S. economy into a recession? I think the consensus is that there will be a recession in 2023, and we've been debating this for a while. What's priced into stocks right here? We know what's priced into yields. The 10-year at 3.5 right now is suggesting that, in my opinion. The stock market up 17.5% in 2 months from the mid-October lows was not suggesting that. It was suggesting something a bit more optimistic. And I guess when I look at today's price action, some of it should have happened yesterday, some of it should have happened today. But down 2.5% in the S&P 500 feels like a big day. Down more than 3% in the Nasdaq feels like a big day. But we've come a long way. So if we were down near 3,500 in the S&P 500, where we were in October, and we had the Fed, speak that we had yesterday and the CPI print that we had the day before, I'd say we might not have been careening to new 52-week lows, because at that point, down 25% or so in the stock market, maybe it encapsulates a bit of that kind of negativity about what could come in 2023. So I really do think it is about where we were 2 months ago, where we were just a couple days ago, and I think we probably, and this has been my call for a while, we're going to go back and test those October lows sometime soon.
So I agree with Dan. I was very surprised at yesterday's reaction. He was quite hawkish. Yeah. There was no, ambivalence there. I actually thought, the economic data out today was cool, right? Retail sales were definitely lower than expected. That actually would have been sort of a counter bullish sign, right? Relative, okay, it's working. The economy's slowing. Right. It's not that he wants that to happen, but that it's a necessary byproduct of trying to tame inflation. So I was surprised that it was up, or I guess it closed flattish yesterday, maybe. Yeah. Surprised that it wasn't down a lot yesterday. Surprised how much it was down today.
Really? Guy, what'd you make of today's action?
Well, yesterday we led the show. I said, if you had told me all this was going to happen, I'd said the S&P's down 150 handles, and it was down 25 yesterday. So you basically do the math and would have been close. So it made perfect sense to me in the context of what we heard yesterday. And this is not Monday morning quarterbacking. I mean, I was scratching my head on the show yesterday. Like, what are people looking at here? Now it's sort of coming to fruition. And, we talk about recession. Again, I'm not an economist, but I will tell you it's my view that recession is the desired outcome of this Federal Reserve. I mean, that's what they want to have. They'll never say it, but I mean, that's what they need to happen. And, you start connecting dots here. You need unemployment rate to go to 5%. That's going to be when they pivot. But all those things are not bullish in the near term for the stock market. Everything to get us there is going to create tremendous headwinds.
Oh, and by the way, we get up there and we might not even see a pivot. We could just see rates hang out there for an indefinite amount of time. Gross, I'll go to you, because for a while you had been calling for a face-ripping rally to end the year. I guess that's up in smoke at this point.
Yeah, I was also, the first one that you called Mr. R for recession. I think we are in a recession. I think we're going to get a recession. I think it's a consensus thought that we're going to sell off. So, I think we're all in the same camp that in 2023, the markets will be lower. What's going to happen between now and then? So we did have, half of a face-ripping rally when we're up 120 handles, but the market changes so quickly that I don't know. So maybe it is up in smoke. We're really burning daylight. It would have to be an aggressive rally to get to 4350 in the S&P. I don't know. I don't think any of us know what news flow comes out right now, but we did. No one mentioned ECB today. It was Powell, and then it's ECB. So it wasn't as if we just had a strict delay on Powell. We had a constant news flow that wasn't great coming out of ECB today as well. So let's just give it another day or two and see where the smoke clears.